Hey fellow stock guardians, happy Wednesday, August 4th, 2021. I'm Hoda, Stockcard CEO, reporting to you from a mixed stock market. Today I covered the jobs report that held back some market indices and looked into the state of vaccine stocks, in particular Novavax. Finally, I researched Cardlytics, a stock that keeps showing up on the losers list. Let's get to it. The market ended the day with mixed indices. Only the NVAX managed to make it into the green. The job situation in America is getting better, but it has not been without its hiccups. The unsteady growth and the uncertainty that comes with it likely held the markets back today. For example, today's ADP payroll report is up 330,000 jobs, which is positive, but is still short of Dow Jones' estimate of 653,000 jobs. This is the smallest monthly growth since February. Lower than expected jobs-related numbers typically hurts the market, as it did today. Before we dive into the winners and losers, let me thank you for being a stock guardian. Our team at Stockcard appreciates you watching, listening to, and reading the daily roll episodes. And more importantly, we thank you for using a Stockcard platform in your research. Thank you for being a stock guardian. If you aren't a user yet, I'd like to invite you to try now. First, hit the like button, subscribe to the show, and then create a free account on stockcard.io. Thanks for becoming a new stock guardian. The winners list on Stockcard today featured some big jumps in vaccine stocks. New monthly COVID cases are outpacing last year's numbers, highlighting the need for more vaccine development and research. Novavax, ticker NVAX, was the first company that caught my eye. Novavax's stock shot up by over 18% today after announcing that the company had reached an agreement with the European Commission for the advanced purchase of 200 million vaccine doses. The company is currently developing a protein-based vaccine that is showing promise in clinical trials. The European Commission stated that it wants to expand the vaccine portfolio available to citizens, which now includes 7 different vaccines. The question we all ponder upon now is whether it's time to rebuy vaccine stocks. Let me share my story here. Last summer, I bought some Moderna, mRNA, when the stock got beaten down after the initial rise. You can see that in my windmill portfolio, which is a portfolio with a small amount of money for things I'm experimenting with and don't necessarily want to own for a long time. I ended up selling at a loss because I realized I wasn't sure about the company and assumed I had missed the boat. The stock price is much higher than where I sold, and the story taught me 2 things. 1, the risk with vaccine stocks is that you never know which one will lead the race. And 2, with vaccine stocks, you need to be both patient and lucky. One way to deal with such uncertainty is to invest into a vaccine ETF, such as GERM, ticker GERM. You can research it by typing GERM in the search bar on a Stockcard and clicking on the suggested ETF. GERM is a passively managed fund focused on the treatment, testing, and advancements of vaccines. The ETF is hitting its 52-week high now, and market sentiment is quite up too. This tells you that vaccine stocks as a whole have a run-up, and if you are investing, you are betting on the continued excitement. You'll need to be patient and lucky to turn a small amount of money into a lot. That's the risk you're taking. Cardlytics, ticker CDLX stock, is down over 27% today after yesterday's underwhelming earnings report. The stock was also down double-digit yesterday, so it keeps showing up on the Stockcard's losers list. Let's see why. Cardlytics is an advertising company that works closely with banks to deliver the most attractive deals it can to the bank's customers. Cardlytics uses purchase data from retailers online and in-store to match promotions with customers already acquired by banks, increasing revenue for their current customer base. This is a great business model that is surely worth it for these banks. But looking at the company's Stockcard, I'm not too convinced it's a good business model for Cardlytics itself. It's not profitable, and it does not generate free cash flow. Sales growth has slowed down too. For example, in its latest earnings report, revenue was $58.9 million, an increase of 109% year over year, compared to $28.2 million in the second quarter of 2020. Yet the results were still short of expectations held by investors and management alike. The CEO blamed supply chain issues and a slow economic reopening for the miss. Scrolling further down, at 11% short interest, it appears many investors are betting against the stock. There is a significant amount of doubt in this company, and possibly for good reason. I don't know the company enough to say it's an opportunity to buy this dip. It seems there is not enough evidence to see whether the company can turn around its growth and start generating cash and profit. Let's wrap up by stopping by Janie Clay's portfolio on StockCard. Janie is the founder of Wealthy Nurse Janie and is our featured investor of the week. Janie runs 2 portfolios on StockCard, her dividend and value portfolio and her higher risk portfolio. I'm so impressed by her return, but also by her superwoman powers. She's a nurse, as you can guess from her company's name, a mom, an avid investor, and she's quite active on TikTok. I'll leave a link to my conversation with Janie in the show notes. I would highly recommend looking her up on the Stock Picks page and following her dividend and high value portfolio, as well as her second portfolio, which focuses on higher risk stocks. You'll get notified when she adds new stocks to her portfolio. That's it for today. If you haven't already done so, please give StockCard a try. Research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Picks page on the StockCard platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And like, subscribe, and share these market recap reports with your fellow investors. Come back tomorrow for another episode. I'll see you then.